Hello, welcome to European Open briefing for Friday, September 7th. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. The US dollar continues to retreat from those 2 weeks highs it set earlier in the week. It fell sharply against the Japanese yen overnight. It's slightly down this morning, around 110.72. So there are reports that President Trump wants to target Japan in his trade war. So that would escalate the trade tensions even further, and then a wider trade war could potentially hurt the US economy. So that's why now this time around we're seeing the US dollar being impacted. Also the fact that Japanese yen is of course a stronger safe haven than the dollar. So even if something concerning Japan is involved, the yen always tends to appreciate. Broader market sentiment does remain in risk of mood, though a weaker dollar is somewhat easing the pressure on other currencies such as emerging market currencies, and we are seeing a bit of a rebound in equities. We saw Chinese stocks closing higher, and we also have a stronger open in Europe, though yesterday Wall Street was mixed. Tech shares continue to decline. If you look at European currencies, the euro isn't doing too badly this morning. It's risen to around 1.1640 against the US dollar. Sterling is also extending its gains, currently trading around 1.2935. We did have some weak German data, though that didn't appear to weigh on the euro that much. The Canadian dollar rose sharply yesterday and is marginally higher this morning. USD CAD is trading around 1.3134. So there does seem to be some progress in the NAFTA talks, though a deal this week is looking unlikely. But the main reason for the loonies gains were comments by the Bank of Canada Deputy Governor, who suggested that the Bank of Canada could raise interest rates even if there is no NAFTA deal. But if you look at the other commodity heavy currencies such as the Aussie and the Kiwi, they're not doing too well. In fact, they fell to fresh 2.5 year lows. Currently the Aussie is trading around 0.7154. The Kiwi is down by a less amount. It's currently trading around 0.6576. Looking at commodities, gold prices are slightly weaker, falling just below the $1,200 level. Yesterday we did see some gains for gold prices on the back of a weaker dollar, but it's unable to sustain those gains this morning. And looking at WTI, it's up around 0.2%, reversing some of yesterday's sharp losses. So yesterday the inventories report showed a large drop in oil stocks, but there was a build in gasoline and distillate stocks, plus of course those ongoing trade tensions. So all of that outweighed the bigger than expected drop in oil stocks. But this morning we are seeing some reversal, with WTI currently trading around $67.93 a barrel. And we can see oil is the biggest gainer this morning. Then we've got euro dollar. At the bottom we've got Aussie dollar, which really hasn't had a very good week. Looking close now at the dollar yen pair, we can see that there's seems to be a bit of a rebound from a 2-week low of 110.37. It touched earlier in the session. The dollar is also down against the Swiss franc, and the dollar index has slipped below the 95 level. But the dollar continues to enjoy strong support from US data, which continues to surprise mostly on the upside. We had ISM non-manufacturing PMI following up with the ISM manufacturing PMI early in the week, where both have now beaten expectations for the month of August. We also have that looming rate hike by the Fed coming up later in September. So the dollar is unlikely to see sharp losses. And of course, later today we've got the non-farm payrolls report, which is going to be the main focus. Looking at the Canadian dollar, it had fallen to near 7-week low 1.3226 to the US dollar. yesterday, but then we had remarks by Bank of Canada Deputy Governor Caroline Wilkins. So on Wednesday, the Bank of Canada policy meeting, we saw in the bank statement that the bank was paying close attention to what's happening with the NAFTA talks. So investors interpreted that as a sign that if there's no deal, the Bank of Canada would not raise interest rates, as it would take the collapse of NAFTA talks into account in its policy decision making. But then yesterday, in a speech, Caroline Wilkins said that in fact, if there is a no deal in renegotiating NAFTA, that could potentially push up inflation, and we could still see a rate hike by the Bank of Canada. And adding to the hawkish sentiment, she also said that at its last meeting, board members discussed about whether or not they should continue raising rates only gradually, and that stoked some speculation of the Bank of Canada potentially speeding up its rate hikes. So all of that has been positive for the loonie. It's currently firmed up to around 1.3140, and we also have, of course, signs of progress in the NAFTA talks, which resumed on Wednesday and are set to continue today. But a deal, though, as early as this week doesn't appear to be very likely. And a quick look at the euro. We can see the euro has firmed up despite the fact that we had a rather poor set of numbers out of Germany. We saw industrial production falling by 1.1% month on month in July. Exports also fell sharply and imports rose. We saw Germany's trade surplus shrinking in July, though this will likely this poor performance in July is likely down to be to temporary factors. We could see a rebound next month, and in contrast, we did have some upbeat French industrial production numbers, so perhaps all of that is supporting the euro. But the main factor is, of course, a weaker dollar. And looking at what's coming up later on today, we're shortly going to have the revised Eurozone GDP growth figures for the second quarter, and later on, all eyes will be on the US jobs report, as well as we're going to see the Canadian jobs report as well. That's it from me. Thank you very much for watching, and have a great day.